market's on a 5-day losing streak. We're down about 5% from the recent highs. There's a rotation going on right now as people are selling. The stocks that ran up the most over the last 3-4 months are now getting hit the hardest, financials and tech. The defensives now are performing better. Utilities, consumer staples. People are worried about Europe.
Right.
We've been talking about this
for
years. And I don't want to say this time is different. I'm not going to use any sort of phrase like that, but
because it doesn't feel different, does it?
It does. It does, and it doesn't. It does in the sense that I think that people are really, truly concerned that Greece is going to leave the Eurozone, and what are going to be the implications from that. Yes, Greece is a disaster. Yes, their government is in shambles. Yes, there's rioting on the streets. That's nothing new. But what happens when Greece leaves the euro?
Let's look right now. Well, Europe basically got that message today. They were down between 2-3%,
right?
Which is really, I mean, it's bad, but it's not that bad. I mean,
it's bad. It's not that bad, but this is the big concern right now, because what is the ripple effect? What happens to the other 16 nations in the eurozone? And so there is so much. People just don't know.
There's
I mean,
so much uncertainty.
So much uncertainty.
Well, you know what I'm going to tell you. You know, the question I think for many investors out there, Steve, is a little bit of, you know, do I buy on the dips, or do I basically wait until things settle out?
Right.
And, you know, well, I'll just talk about how I look at it. Maybe you can give me some of your thoughts. But I kind of look at it and go, you know what, markets, they had a great start of the year. They had a big run-up. Valuations right now, at least on the basis of corporate earnings, expected corporate earnings, and if you believe the U.S. GDP growth will be somewhere between 2–2.5%, the valuations are not that pressing. So I look at it, I go, you know what? Stocks come in a little bit, maybe 5–6%. You know, now is when I start thinking about maybe buying some stocks. Not stocks, I buy index funds. But just because I look at it and I go, you know what? Things don't look so expensive to me. I'd rather be buying now than buying a month ago when a lot of the valuations looked frothy. What am I getting wrong?
Well, I'm not buying stocks right now, so I can't be giving you advice on that. But I would say, though, this week in particular, if you want to look on a very short-term horizon, their earnings season is coming to an end. There's not a lot of economic data on the calendar. The focus is on Europe right now. And as we have seen time and time again, when the clear focus is on Europe, that's not a good sign for markets. I don't know when that ever has been a good sign for markets. Right. So that, if I was in the market, I think I would be particularly worried about that. Because you're right, the fundamentals do look, they look good right now.
The question really is, you know, what people's time horizon or their perspective is on the market. You cover the markets on a day-to-day basis. Many of the people who watch, you know, the business shows, CNBC or Bloomberg or Fox Business, they're looking on a minute-by-minute basis. How is the market going to trade? I don't look at it that way. I look at 3–5-year time horizons. And to me, I look at kind of opportunities when people are selling for no obvious reason. That, to me, is an opportunity to buy.